Hello and greetings from Ethical Advisors to all our dear viewers and friends. This is Dick Modi, founder CEO, welcoming you on this chat with a very senior insurance industry professional, Mr. Gautam Kant, who has been associated in this industry continuously with ICICI Prudential Life, India's leading and the most innovative insurance solutions providers for the last more than 20 years. Gautam, welcome to the show.
Thank you so much and good evening to you.
Friends, as you know, it is very important for us to understand certain recent changes in the Income Tax Act. While we are busy in our businesses, professions, jobs, and families, we have a very limited window left. And hence, without delay, I will quickly ask Gautam to brief us on what are the changes recently announced by the Honorable Finance Minister and how does it affect future income flows, especially on the tax-free income part, which so far all of us have enjoyed. Gautam, can you spare a couple of minutes and explain to us what exactly has happened?
Sure. So what really has happened, if you look back and what we were actually fearing has actually happened. That tax-free benefit, which what we have read through the article and everything, it is going to be phased out and it is going to become history now. Because if you have seen it, and the announcement was very clear that in the recent union budget, the majority proceeds from life insurance policy with the premium of over 5 lakhs to be taxable from the new financial year. That is 1st April 2023. And however, the finance minister has clearly stated that the death benefit on such policies or such premiums would continue to remain tax-free, but not on the maturity and or the cash bonuses which comes. So that is something really important. Fortunately, there is absolutely no impact on the policies which will be issued up to 31st of March. That means we have a window open till 31st of March to invest for investors who are actually looking out for their long-term goals. They can actually go back and they can invest. Hence, This is actually the right time to go for higher insurances, as all policies issued before 31st of March will be exempted from tax.
So can I ask you a question? The first question that viewers have and lots of our clients have is, are my existing policies protected or do I have to pay tax on maturity? So I think the answer is clearly no. They are protected because they have taken it in 2019, 2017, whatever it is, right?
Absolutely.
So that's a big relief.
That is no impact on the existing policies. Yeah.
Excellent. The second question which comes from our viewers is, what if those policies which have taken in 2017 or 19 or whatever, and I'm going to pay premiums in 24, 25, 26, that also I'm assuming will not be affected, then they will not be subject to tax, correct?
Absolutely, because these are renewals which were taken earlier, so hence it will not be impacted.
Okay, great. So what we are saying is, if we take a pause, is that anything which is a fresh policy taken after 31st March, up to 5 lakh rupees, the maturity process will be tax exempt. But if it is above that, then there will be the total amount of maturity proceeds after 10 years, 15 years, 20 years, that total maturity proceeds will be added to your total income, which can be a significant tax burden. Is that correct? How does the investor pay tax?
Absolutely.
Is it on the marginal rate or is it on the capital gains rate of 10%?
No, it will not be on the capital gains. It will be on the marginal total amount. I can give you one example. Like if somebody is investing, right now, or 10 lakh rupees for next 10 years into our traditional participating product, it will, and if suppose in the 20th year, the proceeds, the maturity proceeds lump sum works out to be nearly 2 crores. So what he's actually paid is 1 crore to the company, but the proceeds becomes 2 crores. So on that 2 crore rupees, whatever income tax slabs he is currently, maybe he will be in 30% bracket or maybe he will be in the 40% bracket. So as per that, he will have to pay. So 2 crores ka 40% is nearly 80 lakh rupees. Wow. He has to shell out as the taxable amount.
Correct.
So that is the gravity of the section.
Correct. Yes. Sorry to interrupt. If that smart person takes a plan before 31st March, entire 2 crores is tax exempt because he's grandfathered in that sense. Okay, great. That is very helpful. So it viewers two things: existing policy is not affected, future renewals not affected. You are safe. In fact, you still have a window of 2 months, less than 2 months, I would say, for you to take full advantage and secure your future. Excellent. Uh,
Right.
Gautam, how does this also, I mean, so you look at financial planning, that's what we do as a firm. We are quite strong believers in asset allocation. So while we like equity and equity linked products, we feel that certain tax-free instruments like bonds or, sometimes even PPF, and more importantly, traditional products with a good equity component, etc., they are actually very good balancers because of the risk in the portfolio. That's what I believe. And I feel, I mean, most of our clients who probably are viewing this recording also will know by now that risk and reward have to be balanced. Uh, can you tell us a little more about certain products which are existing and which may be new, which our investors can take advantage of? And IPRO has more than 30, 40 products, but which are the 3, 4, 5 ones which you think are good and also they meet the needs? Can you share some slides or presentation or something where, you know,
Absolutely, sure. I can run through you some of the popular products which are currently doing fantastic with ICICI Prudential. So some of them, this is a small PPT. If you can just see the screen,
yeah,
this
visible?
is one product which is, yeah, this is one product called as guaranteed income for tomorrow with the early income option, wherein the investor has the option of paying for 7 years and getting income for 7 years, or paying for 10 years and getting income for next 10 years. Like for example, give you an example, a 7 year PPT, the customer or the investor would start receiving income immediately from next year onwards. So in a 7 pay option, the investor receives income of 20% every year, while in a 10 pay option, the investor starts receiving 25% of whatever first investment he does. I'll give you an example. If investor invests 10 lakh rupees for 10 years, he will start receiving 2.5 lakh rupees every year for next 10 years.
Okay. Tax
And
free.
post that, tax free, 100% guaranteed as well as tax free.
Right.
And post after receiving that amount, he will continue to receive additional amount for the next 10 years. That also is guaranteed and tax free.
Correct. So as an illustration, suppose somebody is putting 10 lakhs, for 10 years, immediately starts getting two and a half for 10 years. And then
Absolutely.
after the 10th year to the 20th, he gets close to around 12 lakhs or so, depending on age, of course. 12 lakhs every year for the
Absolutely.
next 10 years again. Brilliant. Any other product that you
Yes.
would, I mean, I know we have been talking about Lakshya. Is that also something which is you would like
Yes.
to share a
So,
couple of words?
yeah, if you can see the slide, the ICICI Pru Lakshya Lifelong is also a popular product. Over long term, the investor would start receiving money for the entire 99 years. He will receive money. The best part here is he needs to pay only for 10 years, or he can choose to pay for 12 years, and he will start receiving money starting from the 15th year till the 99 years. So why is it? It is he's getting a regular investment regularly after 15 years, but before that he's also getting a lump sum investment at the age of 50 after 15 years. Plus at the 99th year when maturity also he will receive a lump sum amount. So if you look at he is getting regular income plus maturity income plus he will also get a lump sum income coming to him till the age of 99.
Lovely. So he's got three income streams. In effect, if he's paying about
Yes,
10 lakhs, depending on age, he can actually get back 70 lakhs over the lifetime.
absolutely.
Brilliant. You also had an equity linked product in mind. Is this what Future Perfect stands for?
Yes, this is a beautiful product which the company had launched 6 years ago, and it is very popular with people who understand markets also, because it's a hybrid kind of a product, more of a balanced kind of a product, which actually no insurance company has this kind of a product, because it has the potential of higher returns up to 40%, since it has equity exposure also. And this product is the only product which is giving you a capital guarantee. In fact, no company would give you a 40% equity exposure plus a capital guarantee for them, plus a life cover also there, plus entire amount will be tax free, in the hands.
Maturity.
Because imagine a 40% equity exposure or any exposure which is there in equity, the long term capital gains is applicable. But here, because this is more of a participating product, this comes under a bracket of uh, you know the tax free benefits to the investor.
Right. So it's like a
That
balance
way.
fund. The balance funds are very popular with mutual fund investors. We at Ethical Advisors are not big fans of those funds anyway, because those are quite imbalanced, as you know. There is unduly high risk. So what Future Perfect, if I understand, does is it's a 60-40, 60% safe debt, safe instruments, 40% equity, which is growth. There also, I am told that the equities of the top 100 or 150 companies, so it's very concentrated in good companies with large track records. Moreover, there is no market risk because there is a capital guarantee. आप whatever money you put, जो आपने पैसा डाला है, उसमें आपको 105% का capital guarantee is given by IPRO, correct?
Absolutely correct.
And on top of it, when it matures, so when a mutual fund matures or when this matures, when let's say parallelly there are two different people, the person with Future Perfect will have zero tax, whereas the person who is owning a balance fund will have to pay tax. Okay, that's great. What else? So we've got, as you said, early income gift. You've got Lakshya lifelong, which is long term. You got a hybrid and the only plan on the street as Future Perfect with 40% equity. What else are we in store for our investors to get into the door
So
before 31st March?
yes, I would want to bring your attention on this uh, product which is just recently launched, and it becomes so popular now, and because it is giving you a lifelong income, you know, right from starting early as next month or maybe next year onwards. So this is the new product which the company has just launched in the month of January. It has income in both combination of guarantee, plus it gives you bonus also to the entire term, policy term. And you also have a choice of deferring your by the income by 1 year or 2 year or maybe 3 year or maybe till the premium paying term plus one. So the deferment of income is also possible. Not just income, but also the guaranteed boosters every 5 years uh, for the entire policy term the company gives you.
Okay,
So
so
that's a key highlight. Yeah.
interesting. So this is more flexible. This is more dynamic compared to the existing plans that we have. Okay, and okay, go ahead, please.
It 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 comes with three variants which the company has launched depending upon the need of the customer. Now, if you look at the first variant, which we is the first option for the investor, is the immediate income option. I'll give you an example. If you look at in the screen, this 35-year-old gentleman, if he consistently invests 1 lakh rupees for 10 years, he will start receiving 37,000 rupees as income right from the next year onwards. He will receive it till the 99 years. Not only that, he will also receive a maturity benefit of 1.35 crores uh, at the maturity amount. So, so there's a saving of 1 lakh for 10 years, which he is actually paying around 10 lakhs. But if you look at the total benefits, the total income which he will be getting over a period of 99 years plus the maturity amount, it works out to be nearly 1.59 crores. The best part is every rupee is guaranteed, not every rupee is tax free. That's the best part.
Only if you get in before 31st March. That is very clear. Okay. Option
Absolutely.
2, you said there were some boosters, etc. How does that work?
So what happens is the company gives you a booster of the guaranteed income every 5 years, starting the fifth year, uh, starting the 10th year onwards. Every year from next 5 years till the 99 years of his age, he will start receiving that amount. Suppose the guaranteed income is around for a 1 lakh thing is around 12,500. So every 5 years he will receive 12,500 rupees in his kitty over and above the income which he will be receiving, which is around 37,000 rupees every year.
Can
He
I
will be
pause
getting.
you here for a minute? So the only
Sure,
difference
sure.
between the previous slide and this slide is that suppose this guy who is age 35, when he touches 40, the first booster will come. Is that correct? And then every 5 years. Is that correct?
Correct.
Okay. So it is from the start of the policy, the 5th year he'll get a booster, 10th year, 15th year, like that. In addition to the 37,000 annually, which he anyway gets. Okay, brilliant. And of course, the maturity benefit, etc., is also there. So this is you are saying iProve Gold with booster. Okay, fair enough. And if you were to just throw some light on the third variant, please.
So the investor has a choice to defer his income today to get a higher income later. So wherein this 35-year-old gentleman, if he pays 1 lakh rupees for 10 years, but he would want his income to come at a later stage. So in this example, we have shown that he has deferred his income from premium paying term plus one, which is from the 12th year onwards. Every year he will be getting around 1,02,000 rupees till 99 years. Plus on maturity he will get a value of around 66 lakhs rupees also.
Okay. So again, this is very flexible. If somebody is not in need of immediate income, he can defer it and get more money later on. That is also an option.
Yes.
Okay. And
yes. So I just want to throw like the deferment can be, as you see, I can see in this chart, this deferment can be right from 2nd year, 3rd year, 4th year, as long as if he doesn't want early income, he can defer it for 4 years or 5 years. As the deferment increases, if you see, the annual income also increases. Suppose this gentleman who would want to defer it for 5 years. So the amount is around 58,500 rupees. Suppose he wants to defer it for 8 years and he doesn't want income maybe till next 7 years. So the amount works out to be around 77,000 rupees. So this is a clear example wherein he gets higher income with every deferment for himself.
Correct. And of course, the terminal bonus, I mean, the maturity benefit also remains intact.
Absolutely. Absolutely. Excellent. That also remains intact.
Excellent. Excellent. Thank you so much, Gautam. So friends, without taking too much of your time, what we would like to emphasize from ethical advisors is that don't ever lose sight of asset allocation. Make sure that we have good quality debt and equity, basically safe and risky products in our portfolio. Please align those to your goals. That's what we always tell our investors. Don't chase quick returns. Have a plan, have a mature thought process, do intelligent planning. Please take our advice. Our contact details are very much here. You can WhatsApp me at 99200 or you can write to us at dhm@ethicaladvisors.in. You could visit our website. There's a contact us page. But whatever you do, make sure that before it is too late. And 31st March is the last date. We don't climb into the train as the last passenger, please. Otherwise, you'll end up falling into the track. Plan well in advance. Do spare some time over the week. If you require any help or assistance on understanding the seriousness of these changes in Income Tax Act, please WhatsApp me ASAP and I will be sure to get back to you and have a one-on-one discussion with you. But please don't defer it. You can defer your income. Please don't defer your plan because it'll be too late. Also remember, we have 140 crore Indians and a lot of people are already smart. They've gotten off the block and they are logging in their plans and policies right away because they've understood the gravity of the situation. So please don't be left out in the race. Contact us at 99200 and we'll be very happy to tell you whatever is the budget that you can work out with. We will make sure that your next 99 years income, if on the max side, is tax-free. That is our promise to you. We thank ICICI Prudential and Gautam Khan for sparing his time and valuable insights specifically to the products that are relevant out of the many which exist. And we hope that this short message, this video is of use to you. Thanks again, and we will see you soon. Thank you, Gautam.
Thank you. Thank you so much for having me here. And thank you, everyone. And also all the best. It's a golden chance for all of us to take the benefit. Invest now for your long-term financial security. All the best. Thank you so much.
Thanks again. Thank you very much. Bye-bye.